Hello and welcome to CFO.com. My name is Amol Dete and I'm in conversation with Mr. Kunal Sanghavi, the CFO of HDFC Securities. Mr. Sanghavi, welcome to this discussion.
Yeah, hello, Amol.
So, Mr. Sanghavi, to begin with, the finance minister has, given an interesting roadmap to boost the investments and to boost the infrastructure so that the demand will be created automatically. How do you see the measures which the finance minister has taken in today's budget? Do you think these measures are in the right direction in terms of creating a demand, which will be helpful to grow the economy?
So I will just probably bring you back to what has been laid down last year. And last year, if you look at the even the economic survey and some of the comments about the chief economic advisors also that has been done, what they tried to do is they tried to do some kind of a blue sky thinking is to get into an ideal world without any kind of a discourse and try and do a lot of strategic measures which will take them in a proper way for long-term perspective. And I think so, but they ended up doing altogether different because of the pandemic things and what we saw. This year, they have been able to successfully do a lot of those things in terms of right allocations, right long-term planning. So I believe, first of all, there was no ad hocism in any manner. So that was a very welcome and a positive step. I also believe they have been able to look into every area wherever there was any kind of a requirements, and they have been able to address it rather than just allocating it in an ad hoc manner. So again, that way it was a welcome move. If you look at it from a banking sector perspective, while there are no current problems of NPA or other things surfacing as a priority, but they know that at the end of the day, it is going to somewhere resurface, and that's where they have been able to try and highlight a lot of areas to make sure that there are bad bank or a stress fund, etc., that is created, which will try and make sure that in the long run it does not impact badly to the economy. So that's where I believe, if you ask me, it's a step in the right direction with a lot of thought process and depth, and not necessarily trying to do experiment a lot, but trying to just put and do things in the right direction.
Okay, interesting thought, Mr. Sanghavi. But let me decode it more from you. Considering the measures which the finance minister has taken, will the investors community, will the foreign investors be happy now to significantly invest in India?
The way I think foreign investors will see it is that this is more realistic. We have been trying to accept the reality and we are trying to do whatever is required rather than necessarily trying to probably sell some kind of a dreams in terms of that we will try to stretch ourselves and do something over a period of 1 year and 2 years. This is more realistic. So I believe there will be a much more welcome move. Privatization is going to really excite them even more because more and more privatization is going to help from that perspective. I believe there is already a lot that was done from a corporate taxation perspective. So I don't think so there was any more expectation also over there. So I don't think so there is any much downside on the expectation as well. So it will be a welcomed even from a foreign community perspective as well.
I think it's a good statement, Mr. Sangvi, that we are not selling dreams anymore, but showing a realistic picture. It's a good statement, Mr. Sangvi. But the measures are also related to IFSC and Gift City, where the government wants to push that segment, very aggressively. How do you look at those measures? Because the foreign investors are keenly interested over there.
So yeah, let me give you a thought around the gift city and the IFSC overall. The way in which I look at it is that, like every companies try and introduce multiple products to try and compete in the marketplace, the countries themselves also need to do a lot of different kind of structures and investments to compete in the global market space. So IFSC is essentially trying to get a lot of business from other geographies, be it Hong Kong or be it Singapore for that matter, or US for that matter, and trying to make India more competitive globally. So any step over there, any kind of a fitness is more aligned towards what is happening globally. believe that is going to create a lot of actions in India and going to make India way more competitive and way more similar to rest of the world rather than we just growing in a manner which is more fungible to us. Still keeping India itself also intact very well because our domestic is separate, it's not IFSC, and we are dealing with the way in which we are required to deal domestically. So I believe it's an interesting attempt. A lot of years have already gone behind it, a lot of efforts have already gone, and I believe step by step we are progressing more and more, which will essentially over a period of time excite a lot of foreign investors, and we will see a parallel traction rather than necessarily a shift from domestic to IFSC. And that's where I believe it's a very good initiative. How and when it will be largely successful is something we will all have to wait for, like a product that a company launches. But I believe that's a good measure.
I have one question in two parts. Last time they said about 2 lakh 10,000 crore of disinvestment plan. They could not achieve it. Maybe the reasons are very different, COVID-19 and unusual situation, and the government changed their focus. Now they're coming with 1,74,000 crore of plan, specifically for the disinvestment. What is your sense? Is it achievable? Point number one. And second part of the question is, does the market have the potential to absorb this amount?
So that's where I said it's more realistic because if you see the number reducing in spite of we not achieving the earlier target, but we are trying to be true to ourselves. Okay, let's look at what is more achievable. So two things are important to mention over here. If you look at the overall size of the GDP, the overall size of the GDP has increased. And see, if you see as a percentage of the overall size of GDP growing to more than 2.5 lakh crores, a trillion, 2.5 trillion, 2.7 trillion is what we already reached. And if you see as a percentage disinvestment to this number, we are in fact lesser, much more than only that 25-30,000 crores is what you are looking at from 2.1 lakh to 1.75 lakhs. So that makes it way more closer to what is possible to achieve. I still believe it is not going to be easy by any means because the number per se from an Indian liquidity perspective is far-fetched. We need to do a lot more to sell ourselves to the foreign investors. Then it may be possible. But it's a good attempt. I would say it was a much more realistic attempt. And with LIC kind of IPOs under the foray, a lot can happen is what we should keep our fingers crossed and do everything to see to it how we all together can do a lot around it. Like we are actually trying to see how we can excite more investors and make them participate in IPOs kind of LIC, which will make sure that there's a larger possibility.
So I wanted to come to LIC, and good that you only give me a direction to that. So what kind of cheer that the LIC IPO and specifically the disinvestment or the privatization of two PSU banks brought to the market, what kind of change or the cheer that you can see in the stock market specifically after these two important news?
If you see what happens essentially is that in India, we are trying to look at how there is a larger awareness in terms of people participating in equity markets. And one of the key entry sources is IPOs. So from a retail perspective, that is one thing. So I believe LIC is something very known to people. And that's where the participation is very high. People says and people look forward to participating. So that's from retail perspective, and that's the segment we operate in largely. If you see from an investor community perspective, obviously the foreign investors and the kind of HNIs, they really look at it from the perspective of a larger trust. LIC is all about trust. So I believe there's a lot of cheer. People look forward to it. And we also try to see how we can try and maximize the overall cheer and convert it into a larger participation using a lot of digital means. Because digitization is going to be one of the key factors which is going to help not only LIC but the overall disinvestments, which is going to make it much more fungible.
My last question to you, and a very, very important one. In fact, if you give me the correct answer to this will become a big headline. One is, what would be the size of the LIC IPO according to you? And second is, which are those two PSU banks?
See, if you see LIC IPO, if we are looking at an overall assets of 30 lakh crores, and I see disinvestments anywhere may come to between 1 lakh crore, 90,000 crores is what I am myself pegging at. Around this should be the around size that I am looking at. But let's see, it also depends a lot on market sentiments, the larger participation. We have had the whole of the bull run last whole of the year. Almost 9-10 months was a bull run. So a little bit of a pricing may also impact over there. Valuations which are underway is also something that is going to impact a lot. But I see it somewhere around that, which is going to contribute to that 1.75 lakh kind of an this thing. And the second thing is, I see from a disinvestment perspective, you see a lot of banks like IOB, Bank of India, Bank of Baroda. Our whole government is holding more than 85% plus into this particular banks. Some even more than 90% disinvestments are there. So I cannot pinpoint to any one, but yes, Bank of Baroda is one of the largest ones after a lot of others. A lot of banks already merged into it. So a lot of speculation can be around that as well. But I believe it will be a couple of banks from this all 85% plus holdings where government is holding, where there can be a more of a privatization which is there.
Sounds good, Mr. Sangvi. Thank you so much for sharing your views, and being very open. Thank you so much for sharing your inputs to etcfo.com. Thank you so much.
Pleasure connecting with you, Amol. Thank you. Bye bye.